My name is Pam Hartwell. I'm the Deputy Director of Public Banking Institute. I'm also the former mayor of Fairfax, California, and ideally like to think of myself as yet another one of those elected officials that you can trust. Thank you. So how this is going to go is I'm going to introduce these folks one at a time, and I'm going to give them an opportunity to tell you a little bit about their experience and how, as elected officials, they view the world of public banking and the challenges that elected officials face in getting solutions like this to move forward. I know a lot of the job that we all have in front of us now is to go in front of our electeds and tell them that these are the solutions that must be met. And as somebody who has been an elected, somebody pounding on the podium in front of you is not always, it's an effective way to get someone's attention. It's not always an effective way to get a solution. And so we wanted to make sure we had an opportunity here for you to hear from some electeds on maybe some of the best ways that they can be approached. So I'm gonna go ahead and I'm gonna start with us in order, and I'm gonna start at the end there with John Avalos. He is a member of the San Francisco Board of Supervisors, representing District Number 11, which covers South Central San Francisco. He has authored the nation's strongest local hiring legislation. He also worked to require banks responding to the city's RFP for banking services to answer their questions on socially responsible lending practices. He continues to advocate for responsible banking and is currently working to develop a plan on how to implement a public bank. Take it away, John.
Thank you. Can everyone hear me? Great. It's really great to be here. My name is John Avalos, and I serve on the San Francisco Board of Supervisors. I represent a part of San Francisco that is the southernmost district of the city, close to Daly City. We look more like Daly City at times than the rest of San Francisco. Very working class, lots of immigrants. We're the district that has the most families. We have the district with one of the highest unemployment rates in the whole city of San Francisco. We also are the district that has the highest level of foreclosures in San Francisco. I come out of a social work background, a community organizing background, and a labor background. And I see my role on the Board of Supervisors as helping to really enhance the efforts of movement building in the city and pushing for economic justice in the city as well. The idea for a municipal bank in San Francisco has really been kind of in vogue for about 10 years. Early in the 2000s, during the Matt Gonzalez run against Gavin Newsom, that was one of the ideas that was put forth. It's had a lot of currency, and most recently we had a revival of our community congresses in San Francisco, where community groups from across the city on a progressive agenda came together to look at many ideas around how to promote economic justice and community development in the city, and the municipal bank is one part of that effort that came out of it. In 2011, that year, there was a mayoral campaign. Again, I ran for mayor that year, and my platform also included a municipal bank. At that very year, I asked the legislative analyst who works for the Board of Supervisors to look into the idea of how we could create a municipal bank for the city, and came forward with lots of ideas. But one we banged our head against was that state law had prohibited municipalities from actually investing their using their investment dollars towards creating municipal banks or towards efforts that might limit their solvency. And that was a kind of a difficult thing to hear, because we thought there was a lot of movement towards actually having a legal premise for a municipal bank. But we actually didn't give up. We felt that there was many instances within the city and county in San Francisco where we were actually using our general fund dollars to provide loans for people, whether it was down payment assistance loans or small business loans. So we knew that there were some ideas that were in place that could really help communities that have been struggling in the city. And overall, our mission in San Francisco is how to really alleviate a lot of the poverty we see in San Francisco, how to make sure that a lot of neighborhoods and communities that are shut out of the budget process in a large way, where we could actually move resources in ways that can really build the capacity of neighborhoods to look after themselves, build the capacity of neighborhoods to really manage their own community development. And we thought that the municipal bank would be an effort to move forward with that. What was really exciting in 2011 as well, separate from any mayoral campaign that was going on, was the Occupy movement. And in San Francisco, it was very vibrant what was going on in the streets of the city. We were able to really hold off an effort to destroy the movement with the police force by holding together a strong community and labor coalition in the city. I was very excited to see that. As we were pushing, the idea of municipal banking, moved into responsible banking as well. And so, as mentioned in my introduction, we've done a lot of work. I don't think it's enough to try and create an alternative banking system that will lead to an alternative kind of economic system within the city and county of San Francisco. We really had to work towards holding the banks accountable. The Occupy movement really put a spark under a lot of elected officials to really do that work. And so we were actually, as the city is going out to do another request for proposals for who's going to be doing our banking for us, be it Wells Fargo, Bank of America, or Union Bank, we wanted to make sure as any bank is applying to do the work of the city that they're actually providing us with information about how they're going to do, how they're going to be more responsible with preventing defaults, making sure that we're not fast-tracking foreclosures within their vaults, and that we're actually doing everything we can to support the community development effort. And so we were actually able to actually get some changes with how we did our business to make sure that banks are providing that information. And it actually helps the city to be able to carve out its own response to holding the banks more accountable moving forward as a city. Just this last couple months, in fact, this last month, we got great news from the city attorney on our pushback on what their opinion about whether we could actually do municipal banking in San Francisco. And they found that because we're a chartered city, that we actually have the ability to actually move forward with an idea of using our public dollars as a in a banking institution. I believe the sky's the limit. And it's not just San Francisco, other chartered cities as well, like Los Angeles, the city of Oakland, the city of Santa Rosa, and about 100 other chartered cities are able to do this as well. And so the question is, how do we build it? How do we get the money into a financial institution that's publicly owned, and what does it do? One of the things that we had worked on this past year as well is responding to the LIBOR scandal and looking at how we have invested our dollars in derivatives and in swaps. We wanted to make sure that actually we were actually minimizing the impact on the city. We found that it's been relatively minor, but we wanted to make sure that we were actually looking at our financing efforts to make sure we were sound and solid in San Francisco. It turns out that we weren't hit as hard as other places, but we want to be able to join in it with other municipalities that are trying to get litigation to recover what we've lost with the LIBOR swap that's been going on. Our goals around creating a municipal bank, ultimately we want to be able to fund economic development projects, affordable housing projects. We also have an effort to build municipal power in San Francisco, and a bank could be a way to actually move that forward as well. We also want to look at our own municipal bond financing based on the LIBOR experience that a lot of municipalities have had around the country and other counties have had around the country. How can we actually create our own financial tools so we're not reliant on the sketchy financial institutions that come out of Wall Street? We want to also be able to support a lot of households that are dealing with the mortgage crisis, especially households in my district where defaults are pretty high, that we could actually have our own ways of supporting households, that we can actually maintain our wealth in our single-family homes, our working-class communities. Our wealth is often in our homes, so how can we use our financial institution, our public finance institution, to help households prevent foreclosures? We also want to look at small loans that could be available for small businesses and make sure that we are increasing the capacity of credit unions and community development financial institutions in San Francisco. And overall, we want to be able to create alternative economic systems, ones that can be publicly owned and self-reliant and offer greater self-determination for the people of the city, and also be an example for other cities around the country, and learn from other cities around the country how we can actually move forward and create our own financial institutions that will be publicly owned and be managed by public, and actually really be based on democratic principles. And so we're really excited about what moving forward with that.
Thank you. I let you go a little long because that's awesome. Thank you. Herb Meiberger, tell me if I've slaughtered your name, received his MBA from UC Berkeley in 1980 and currently teaches finance and investments at the San Francisco State University. He worked for 20 years at the San Francisco Retirement System, where he managed a $1 billion bond portfolio. Since 1992, he has served as a commissioner on the 7-member board, which oversees the $17 billion pension fund.
Thank you very much. It's also a pleasure sharing the dais with Supervisor Avalos as well. Can you hear me okay? Is that coming back? First of all, let me say my board, it's a 7-member board, and none of these views represent, I'm not authorized to speak for the board, which should be pretty clear. That I do have the minority view on the board. I came to the attention of everyone by several presentations at the retirement board about the predatory loans made by several of the banks. The Occupy Wall Street crowd came, Occupy Bernal crowd came, several labor unions. It's amazing, the 99%, it's all, labor is 100% behind us, in case you're not clear on this. Local 1021 came, I had letters to support my position. And what I tried to do, and failed miserably, humility is sometimes good for us though, was to try to keep the bankers honest. That is, for the banks, for the board to take a position on social policies. And the resolutions that I proposed had to do with, number one, having to vote our proxies. The San Francisco Pension Fund owns about 1/300 of Wells Fargo Bank, JP Morgan, and the others as well. So we vote. And all I wanted to do was to vote to separate the chairmanship from the head of the board. I don't know if you're aware of this. Jamie Dimon, Chief Executive Officer, who was recently reelected as president of the board, is also a member of the Federal Reserve Board. Just show of hands, how many of you have read The Creature from Jekyll Island? Yeah, I kind of thought so. I was ranting and raving about the banks in my class. One of my students said, why don't you read this book? And actually several that I did. You see the collusion between the banks and government and how we got into this mess. The sad thing that was presented were these people that had lost their homes due to foreclosures, racially targeted. Foreclosures, Afro-American, Latino communities had higher interest rates as well. The sad thing is, even with the government and the cities, the attorneys general's solutions in terms of what, $9.3 billion by 23 of the mortgage servicers, an additional $175 million to Wells Fargo Bank. We've heard about the LIBOR fiascos. JP Morgan, the whale trade, oh, it's just $1 billion, don't worry about it. We've heard all of that, and I couldn't get my board to take a position to vote against Jamie Dimon, John Stumpf, among others, who are seeking to serve as directors of the boards. I think that's one of the ways we can do. We talked about what avenues we can do. Well, certainly my fund can vote our proxies. The other thing I wanted to do, and this was strong labor support, 1021, totally behind this. Tim Paulson signed a letter as the head of that. All the unions were unanimous behind these resolutions, and I still could not get a majority of votes on the board to put these into practice. The sad thing is to hear the stories of these people that had owned these homes for 40 years, family homes, disability case, they can't make the payments. They thought the banks were trying to renegotiate the loans. This one guy gets a knock on the door. Are you aware your house is being sold in an hour? And then it gets worse. And here's the thing that I heard, and then it gets worse. Lost his house, the bank stole the equity, they give you a pittance to solve and to settle the suits. Now they evict you, ruin your credit. Now he's living in his car. And then it gets worse. I mean, you hear these stories and the accountability issue, which is a central issue, and I hope we can all move as a result of this conference. How can we deal with the credibility? What has happened to these people? Have they had their hands slapped? You know, we talked about being fired. If you and I would do this, I mean, it would be, we'd lose our jobs. It would cause financial problems, etc. But there has not been accountability because of this creature from Jekyll Island. I think it's as simple as that. We have to do something. I think we're a public board. Our meetings are public, second Wednesdays of the month. Oh, just to see, if you want to see the shame on the bankers' faces, go to my website, Meiberger.com, because Steve Zeltzer, who introduced me to this, who's very active in labor, filmed the banksters while they are specifically lying and denying to the people whose homes were foreclosed. You want to look up shame in the dictionary, it's on their faces, the bankers. The board was stacked with Wells Fargo employees just to tout the goodness that Wells Fargo and these other banks have done. And then my players got on the field in terms of saying, well, look at this. We've lost our homes. They would not negotiate with us. They would not discuss the forbearance issues. They lied. They reneged. They had to go to the senators and congressmen and women to try to get recourse, and even then they couldn't get it. These are the banksters. These are the banksters. Well, I want you to know that I'm in a position of power, as Supervisor Avalos is. I'm committed, after hearing their stories, believe me, I am committed to help you guys because it has to be done. When I was addressing to try to get my colleagues' vote on the board, I quoted Frederick Douglass, the first black in the White House, who said, "Power concedes nothing without a demand." These are very powerful people, very, very influential positions, and they throw their money around and have a lot of influence. So it's going to be tough, but I want you to know my dedication to support these positions. In terms of a city bank, my fund, in addition to being a $17 billion fund, we pay out $1 billion a year in benefits, so those go into banks. Maybe we could put them in a bank someplace, a public bank someplace. You know, I was trying to find some solution, but what about the credit unions? And I figured, well, they don't have the capacity. Maybe that's not going to work. It was so funny because Steve, during the interview, he said, "What do you think about a private bank?" Or a public bank, excuse me. But I said, well, the way these banks have done, I'm all ears. So there has to be something else out there. I mean, the public, the Wells Fargo, the JP Morgans, and all the other banks, it's a miserable failure. Believe
Thank
it.
you. Yeah.
It is.
We gotta keep
So
moving,
I'm open
sorry.
to ears. So I'll work with you guys to come up with some solutions.
I wish we had more time with each of these folks, but I want to make sure that we all have a chance to get out to the reception, and I'm hoping that all of you will be joining us at that reception so that we can get folks to talk to you directly as well. It is a great pleasure to introduce Laura Wells. She's a co-founder of the No Corporate Money campaign. She ran for governor of California as a Green Party candidate in 2010. And she was actually arrested outside the gubernatorial debate that was held in this room and charged with trespassing at a private party. So I'm especially, as one of the very active, yes. As someone who is very active in the Green Party in this county, I am more than delighted to welcome you to this stage tonight.
Well, and thank you, and thanks to Dominican University and their security guards for, allowing me to come unshackled. It's great. And so, it was trespassing at a private party, and isn't that what we want to do? We want it to stop being a private party, stop being private banks, and start being a public, party, and a public debate, and public banks. So, what I'm going to say is that what I think that we can do basically consists of three things. And But even before I say that, I think one of the things that we need to do is really nourish ourselves with hope. I think hope is an essential human nutrient, and I want to thank the Public Banking Institute because of roll up your sleeves, kind of let's get this done that's happening here. And also, I want to say, look at Iceland, as we've learned about today, and look at places in Latin America, and you've got to hear through the lies. So I want to say, I just came back from Venezuela. I went to see the elections, and I live really simply so that I can occasionally go places like Latin America and see what the hope is there. They've got a real solid election system and so on. But I went there. I have to admit, sometimes you don't know what your agenda is until after you go there. And I wanted a recipe for success. I wanted, okay, what do you do? What do you do? How do we change things? And there is no recipe, of course. And because one thing happens after the other, and you never know what's going to happen. The one thing you know is that everything we're doing will be of use when the change actually happens. But I believe that you really need to have a strong social movement. You have to have people in the streets. You have to have people at, whether we're participating in Occupy, and yes, as a resident of Oakland, it was thrilling to be part of those thousands of people marching to the port with Occupy. And it was also, Charlie Eaton is part of Occupy Education. And the last time I saw him he was dressed as a zombie while we were at a UC Regents meeting, talking some truth to the UC Regents, the University of California Regents. So social movements, yes. In the streets, yes, or however we do social movements, and public banking is like a social movement. And also the electoral movement. We've got to take part in that. And whether it's as voters or whether it's as candidates. And so Charlie Eaton, again, where are you? And Victoria Grant, please run, And a whole lot of other people in this room, please run. If you've run for office before, then consider running again. An awful lot of times people don't win the first time, but then they win later. And encourage your friends. We actually all need encouragement. Encourage your men friends and encourage your women friends. We need to have people who are running for office. We're working on a no corporate money campaign, and people say, well, where are the candidates? Who are the candidates? So we need to have candidates running. Consider it at whatever level. And don't let people say it can only be at the local level. We need people running at all levels. As a matter of fact, in Latin America, 12 presidents were not the U.S. first choice, which was extremely good news for the people of those countries. And some of them got brand new constitutions like Venezuela, Bolivia, and Ecuador. And as you may know, Ecuador gives rights to nature. So, yes. So there's social movements, there's electoral movements, and there are all the individual local efforts that we do to build strong communities, to build local gardens, to have local participatory budgets. People are working on that in Oakland, to have public banks. And I said three things, and a fourth thing is just sort of an unwavering commitment, which I can see on everybody's faces. I'll tell you what my little dream is here. And that is that we need champions. We need champions on these boards. People who will back the social movements and the organizations that were in the public banking, who will actually back it, sponsor it, and see it through. So here's my dream. I'm looking at running for state controller in California in 2014, and I want Ellen Brown to run for state treasurer. And I'll tell you what, she did not give me she did not turn me down when I mentioned it to her. And I figure we'll show them what a kitchen cabinet can really look like.
Thank you very much, Laura.
So just, keep running, keep voting, encourage young people to vote and to run. What happened in Latin America was that the young and the impoverished started voting. The last election in Venezuela had a 78% voter turnout. And once the young and the impoverished and the rest of us give up on the corporate-run, give up on the corporate-run candidates and vote, we'll get someplace. Thank you.
Thank you. The only thing I would add to that is when people like Laura run, oh man, go help her out. Next up, we have Councillor Kristyn Wong-Tam. She has an extensive career in investing in Canada's largest city through both the public and private sectors. Prior to her election to the Toronto City Council, she was an accomplished entrepreneur, a real estate professional. She is co-producing an independent documentary about government austerity and public banking that will be released by the end of 2013. Yes. Thank you for joining us.
So thank you very much, Pam, for that introduction, and thank you for the invitation to be here with you today. This is a topic that I have a lot of interest in, and representing one of the biggest cities in Canada comes with a lot of responsibility. The budget of the City of Toronto is, the operating budget alone is well over $10 billion, and like all municipalities and local governments in Canada, we are not allowed to run a deficit, so we have to have balanced budgets every year. And so there is no option of going insolvent. We have to make sure that we keep our financial house in good order. Now, Canada, of course, is your neighbor to the north. I'm sure you all know that. But in case you didn't, I just thought I placed that for you geographically. But we're under a slightly different political climate right now at the City of Toronto. Even though I believe that my city is a fair-minded city, it's a very urban city. It's not just the biggest city in the country. It also happens to be the economic heart of the country. So the major financial insurance cluster in the country actually resides in Toronto. We currently have a political situation which is very contrary to the pulse of the urbanism in the streets. We have a very neoconservative administration. So as you can imagine, times we don't often have progressive values in thinking, and oftentimes new ideas are shut down pretty quickly. In 2011, I co-authored an op-ed article in Canada's largest financial newspaper with my co-producer, Stephen James Kerr, who's here today. We basically created a proposition, and we put this forward as a budget resolution that the City of Toronto consider as a mechanism for revenues, public banking. That article, which was about 785 words, sent the newspaper into a tizzy, and the Twitter sphere in Toronto just sort of lit up. And I can tell you that it was probably the first time where we put out a proposition of that nature, and I have a fairly a large Twitter following, mostly local and now national Canadian media outlets that were all asking, what is she talking about? Is she trying to nationalize banks? Why is she saying this? Like, we don't need it. The Canadian banks are strong. And the myth continues to perpetuate is that the Canadian banks are strong, is that we are okay. Look at what happened in America. Look at what's happened in Europe. We don't have the same problems. Our pension funds are strong. We have very good pension density within the public sector, and we're well capitalized. Of course, for those who follow the news at a micro level, will know that the Canadian banks got swept up with the financial crisis, although it didn't become international headlines, and it didn't become even Canadian headlines, to be quite honest. We were caught in it all, simply because we were, as a financial cluster, we were interwoven with every other financial institution across the globe. It's not that our banks operate in isolation from what happens in America. And I think Charlie Eaton had a slide which demonstrated where some of the capitalization comes from. And you'll see that the Canadian pension funds are very heavily invested in the P3 structure of new infrastructure financing. So this is a very different climate for me to work in, politically in Toronto and in Canada. But I think that the underlying values of what public banking can do as one of the mechanisms that we can use to liberate money, to ensure that currency becomes a tool of sovereignty, that we use it as a public utility, is just that, is that it becomes one more additional tool in our tool belt. So the budget, as I mentioned, the City of Toronto operating budget is over $10 billion. We have one contract with one bank, so all our tax receipts are deposited into this one institution. And that's a 5-year contract generally, and every 5 years we go through a renewal process. That renewal process is very much closed door, so unlike the transparency that the supervisor is asking for in San Francisco, we don't know these things until I haul in the public finance staff of the City of Toronto and say, so who do we do our banking with? And how do we ensure that the bank that we work with is investing in ethical investments that we support? So these are constant, crucial questions, and if we can capitalize, for example, in Toronto's case, RBC, the Royal Bank of Canada, if we can capitalize their banks with $10 billion worth of tax receipts, then why can we not use the same legal mechanisms that should not be afforded to governments, so we can create, especially with the City of Toronto, which is created as a creature from the province, why can we not create our own municipal-owned bank, capitalize our own bank with public funds, and then to put that into the public good? So we use it as a utility, no different, no less. So that's the conversation.
Thank you so much. See, aren't you inspired by elected officials already? Last but certainly not least, I'm happy to introduce Dan Hamburg, who has served twice on the Mendocino County Board of Supervisors, representing 2 different districts. He also served a term in the U.S. Congress, representing the North Coast of California. Dan.
Thank you very much. And I come from that part of California where they grow all the oregano that Matt was talking about last night. And we didn't always grow a lot of oregano. As a matter of fact, we used to be most famous for growing trees. You know, really incredible redwood trees. There used to be, I think, 2,000 acres of virgin old-growth redwood that stretched from Santa Cruz up to the southern part of Oregon. And really, Mendocino County was a timber and fishing-based economy. It wasn't super wealthy because corporations always controlled a lot of the economic activity. You know, it was always Louisiana Pacific and Georgia Pacific and Simpson and those big companies. So, you know, we're kind of, you know, in addition to the whole banking mess, Mendocino County in many ways has functioned for a century maybe, or close to it, as a kind of economic colony. And, you know, at this point in time where we really don't have a timber-based economy or a fishing-based economy, and where we're really pretty much dependent on, I mean, our largest legal industry is tourism, which is, as all of you know, I mean, tourism is a fine thing, and there's a lot of reasons to go up to Mendocino County and enjoy the beauty and the camping and the ocean. You know, it's a petroleum-based industry. Doesn't produce a lot of living wage jobs, certainly. So we've got that, and then we've got the wineries. We used to have a very diversified agricultural economy, and now we've got pretty much a wine grape-based economy, and you know that's a good enough thing. But as all of us know, agricultural labor doesn't get paid very well either. So we have, and then we have a lot of, you know, a large service sector and government and education. But, you know, basically, we really fit what Jim Constanza was talking about. I mean, we are the 99% that is loaded with debt. And if you look at our balance sheet, at the county's balance sheet, what you see is an overwhelming amount of debt. You see pension debt, you see infrastructure debt, you see, we even have to borrow money, what's called trans-borrowing, which is money that we have to borrow every year just in order to run the county operations while we wait for property tax revenues to come in. Trans stands for Tax Revenue Anticipation Notes. So we're borrowing money in anticipation of property tax coming in just so we can meet payroll and meet the normal expenses. So it's all about debt. Our yearly budget, in contrast to Toronto, is about $250 million. Only about a quarter of that comes from in-county sources, property tax, bed tax, sales tax. So most of it is subvented from the federal government. I think this is pretty generally true too for rural counties. I mean, there's been a lot of conversation here, and it's been really interesting conversation, but it's mostly been urban-based and stuff going on in cities. And I'm talking about what goes on in, a really significant part of California and, of course, the country, which are these small rural counties, which, are really, really struggling. And, I got a question the other day when I was speaking to a group of business people, and I'm chair of the board, so I get invited to, talk to the chamber and talk to the employer and the people who run the companies. And one of the questions was, Dan, how long before the county of Mendocino declares bankruptcy? And I said, well, I don't know when it's going to happen, but, we'll have plenty of company. Because, the fact of the matter is that, and this also goes back to what Barack Obama did with his so-called stimulus program. One of the things that he provided no stimulus to was local government. And those generally are better jobs than the tourism jobs and the service jobs and the jobs working in the vineyards. I mean, these are the better jobs. But even that sector is in big trouble. I mean, I've had to vote as a member of the Board of Supervisors for a 10% across-the-board wage cut for all county employees. I mean, that's heavy. If you're making, $40,000 or $50,000 as a, beginning as a social service worker or a librarian or a groundskeeper, and they take 10% of your wages away, plus we're getting killed with health insurance costs. I don't know if Obamacare is going to help that. We all know that Obama totally betrayed us on health care. And so, we don't have a system to look forward to that's really going to stop these galloping increases in rates. And the other thing that's killing us, and I think it's killing counties and cities across the country, is our pension fund. When the recession hit in 08, 09, our pension fund lost, let me do the math real quick, about 20% of its value. And all of us know, and it's been talked about in this room, we're just building another bubble. And of course, where's the pension fund invested? Is any of it invested locally? Not a dime. It's all invested in Wall Street. Or you look at our county investment pool, which is the pool of all the taxes that come into the county and are held in the treasurer's office. That's about a $300 million pool. Is any of that invested locally? Oh no, that's all invested either in Wall Street or in General Electric or Walmart or Coca-Cola or in international equities and it's all bullshit. It's all wrong.
Thank you, Dan.
So, I want to thank, and there's at least 3 people here from Occupy Mendocino County, and they have been very strong advocates for socially responsible investing, for foreclosure relief, and really looking at all these phony records that are in our county clerk's office. And I'm sure everybody's familiar with Phil Ting, who is now an assemblyman, but Phil Ting kind of got famous for looking at the records in his office in the city of San Francisco and finding that 80% of the documents in his office had some fraudulent aspect to them. And I've talked to our county clerk, and she assured me that the same thing is true in Mendocino County. It's probably true throughout the state and even throughout the country, and this goes back to MERS, and all of you know what MERS is all about. But anyway, I want to get off my high horse. The best thing that I've heard today was from Supervisor Avalos, who said that they have an opinion regarding charter cities being able to set up public banks. Because when we went to our county, we are not a charter county, but we need to become a charter county, and then hopefully we can set up, the first county-based public bank, or maybe we'll end up working with Sonoma. I don't know. Sometimes we need a big brother. But we need to keep our funds local and invest them in jobs and housing and the environment